Root, I guess if you want, why don't you introduce yourself to both the Twitter audience and the Spaces audience? I'll unmute real quick and I'll say that again. All right. So while we wait for Sam, we are going to introduce Root to the audience. Root, why don't you unmute yourself and introduce yourself?
Hey guys, thanks for having me on. I'm Root, on-chain analyst. I like to look at, Bitcoin cycle analysis and on-chain analysis is what I do. I like to get to the root of things. And thank you so much for having me on.
Absolutely. I love that, getting to the root of things. And some of my favorite parts of your analysis is how creative you are with trying to look at the data that is around Bitcoin. Can you talk about a couple of like the unique, visualizations and metrics that you use in your analysis?
Yeah, sure. So I have looked at, I started off with just looking at cycles. So comparing the different Bitcoin cycles. People have aligned them before from the halving, obviously. So I came up with some different concepts to look at it, to also look at it from the previous all-time high. And now you see the charts all over the place, but that was in the beginning. I made some spiral charts. I didn't come up with the spiral concept, but I surely worked upon it further, also to look at it at the spiral chart, for example, in terms of blocks instead of just time. And so those are some of the creative things I like to do. And soon I hope to come with even some more cool stuff. I cannot really talk about that yet, but there is a model that's coming up. Hopefully next week or so I can share it. So I'm excited for that as well.
All right, y'all. Well, we have Sam Rule in the house. We have Root in the house. This week, we will not have Dylan LeClaire. He is busy filming, actually, with Bitcoin Magazine up in Vermont. So more coming from Dylan later. But thankfully, Root is coming in to fill in Dylan's huge footsteps. And he is definitely well suited to bring some really awesome analysis. Sam has set a pretty awesome agenda for us. But I want to give a quick shill to everyone about the deep dive. Sam, I know you and Dylan work really hard every single day, putting out some of the most cutting edge alpha around what is happening with the Bitcoin market. You look at derivatives, you look at market sentiment, you're looking at macro forces, you're looking at on-chain data. This is really a 360 analysis type of a deep dive. Sam, do you want to talk a little bit about or add on to what you're doing each day for the deep dive?
Yeah, totally, sure. Just like you said, Dylan and I are working at this every day, try to publish kind of a daily, weekday issue on what's going on in the Bitcoin market. That can be everything from futures ETF to public miners analysis to price action to on-chain data, just trying to take a 360 view, like you said. We publish, weekday content for paid subscribers, about one issue a week for a free subscriber tier. So if you're just interested in checking it out, or you want to get some more Bitcoin market intelligence in your inbox, sign up for the free tier. It's on Substack. You can see the link in my Twitter or Dylan's. But yeah, this is what we're doing all the time, and just trying to deliver, good quality content and research about how the Bitcoin market structure works. So.
Yep. And actually, last month, they dropped a 30-page monthly report, which is pinned to the top. And if you follow the link in the pinned tweet, that will take you to the free tier, and you'll be able to get that PDF monthly, which is absolutely just incredible. So really great job, Sam and Dylan, on that. Sam, I guess let's just jump into the topics. I know the first one that you had teed up here is talking about the latest price action and overall market thoughts. I personally, I'm unsure of where we are. It seems like Bitcoin's more relevant than ever, but obviously price action doesn't always follow that. I've spoken to really, really smart people that think we're in a bear market and that we're going to be grinding down. I'm curious what you and Root are thinking. I'll pass it off to you, Sam, and then maybe Root can chime in.
Yeah, I'll share. And this is tough. You're thinking about all the time about this much broader market and where it's headed, and a lot of uncertainty. And I think, the way I've been leaning into analysis is try to understand the macro uncertainty picture as much as possible, which, we kind of saw from Bitcoin price in Q4 after this run up to new all-time highs, whether it's this kind of end of the year gain loss selling, kind of risk off appetite increasing, portfolio rebalancing allocations. Bitcoin just like the rest of the markets, equity markets included, went down. And so, now the regime that we're headed into from a macro regime for this year is not a promising one for Bitcoin outlook. So you have these like two colliding forces where you have really strong fundamentals, but you have a macro outlook now that's, we'll see if inflation peaks anytime soon, but growth declining. That puts this tough backdrop on Bitcoin. And I think the cycle this time around, we can get into cycles talking. I know Root's done a lot of work on that previously. It hasn't really followed suit to the cycles we had before. It's much different. Bitcoin's a much more growing asset. Volatility seems to be dampening compared to the kind of blow off tops we had before. So I like to see, here we look at a ranging consolidation phase. Equities correlations is still heavily strong. It's good to see that, lately, and we got some charts we can pull up too after we go through some intros, but, Bitcoin really getting hit, going down 30, 40% 2 times on a 30-day percent change. And then you see some good demand buying that in too. So I think you might've had, some macro sellers in Q4 reallocate, sell off some Bitcoin, and what's left is some really strong fundamentals. But I think uncertainty is the key word. Like over the next 2 months, we seem to be in a waiting holding period for what the macro is going to do with March rate hikes coming up.
Okay, I can maybe jump in here. So I'm unmuted, right? Yeah. So I think I kind of agree with Sam's analysis. I think the situation we are currently in is most comparable to the 2019 run we had, and then we had it we went to 14K and then we had a drop. In terms of on-chain analysis, I think we're in a very comparable situation with that one, and so I think there's a lot of macro uncertainty. There was actually also in that time because we got the Corona crash just then, and that brought us back to a low. So I have some on-chain floor indicators that I look at. One is an intermediate indicator, and that's around 36K. And then there is really a floor, which is at 29 currently. And it depends a bit. So I expect to get to this intermediate floor. Let's say it's called the mezzanine. Actually, it's quite likely that we might touch upon it. We don't have to in the next days or even in the next week or 2 weeks or something. But it's quite likely that at some point we will still touch upon that level again. That level is also it rises. It goes a bit along with price action. So, but even so, only I would say in terms of if we get like a black swan event, let's say the war with Russia, with Ukraine, if stuff like macro uncertainty, increases, if we get like a sort of panic in the stock market, in equities as well, then surely that will correlate with Bitcoin. And I think we can drop to the floor, which is at 29 currently. Now, I do think actually the low is in terms of on chain. If we look, there's many indicators. We'll get into several as well in a bit. But there's many on-chain indicators that indicate that we have been at a macro low. Short-term holder supply is one of them. And so I actually do think the macro low is in. We're just in kind of this choppy price action situation. I think we're going to range a bit between 47K, which is the short-term holder cost basis, which is a level that sure might give some resistance in the next weeks or so. And so I think we're kind of going to range between 47K and maybe 36, for some weeks, maybe even until March. But in the meantime, we're kind of building up this solid basis, because the demand of short-term holders is slowly coming back. And it takes time. We are a little bit in bear market conditions for sure if you look at on chain, and but it looks like this bottom is in and that we're slowly getting out of it. So it will take some time. We will probably have some swings up and down still. As I said, within that range, and that's for me basically the base case. And I would expect, like, at some point, maybe even a little bit before, or mid-March or so, or if not at the end of March, I would expect that Bitcoin can, if we can recover this short-term holder cost basis, then we can get really higher prices from there on. But we're kind of at the start of a new cycle, in my opinion. I mean, you can look at it from different perspectives. You can look at it as like a lengthening cycle. If we all believe the top is not in yet, if we believe that 100K at least is coming or so before next halving, you can look at it two ways. You can look at it like as a lengthening cycle, that we're now currently again in this in a sort of mini bear market again, but I would argue, and I've put a chart on that out, and we'll probably discuss that a bit later as well, is that we're kind of in a new cycle. Basically, if you look at the supply dynamics on chain, it looks like we're kind of starting a new cycle overall. But it's kind of the same outcome, right? Like I would expect still to reach at least levels of 100K before next halving. But yeah, we will see. We will go with the data, and maybe we can get into some charts.
Yeah, speaking of charts, would love to get into some charts. And for everyone who's watching or listening on Spaces, I pinned to the top the link to go to the live stream where we are live streaming. You can go and see Root's cute little mascot here, and you can also go check out the charts we're going to walk through. But honestly, it's way better to see Root here on YouTube versus on Twitter Spaces. So really recommend porting over to that. But Sam, I don't know if you have some charts handy that you want to jump into right away here. I guess you have something ready, but in general, I do kind of agree with you, Root, that we are at this kind of we're at a critical point here where are we going to find out if this is in fact a longer cycle and the top is yet to come, or if we have entered into the next cycle and the previous top was 69K or something like that. Sam, I see you're showing a chart here. You want to take over?
Yeah. We've just got some charts here we can run through, and we can take the kind of conversation wherever. I'm no technical analyst by any means. When I look at price, I do some, but kind of hold a lot more analysts in high regard of what they can do there. But quickly, what this is looking at in terms of when we just think of like price and context and some of these moves, this is 30-day change in Bitcoin price. And I've got a legend here. It says bottom, other, top. Those aren't necessarily, perfect conditions of saying, hey, this is a top, this is a bottom, or other. It's really just looking at this 30-day percent change in price, kind of the average around there, 9 to 12% through the mean. And then looking at like having an overextension of that to the top when you have these explosive Bitcoin moves up, and then something to the bottom as well. So I think what's really curious in this sense is, although, this might, emphasize maybe the macro uncertainty point, kind of what we've seen a little bit more in Q4 is that, we have multiple 30-day price changes below, minus 15% over the last few months. And the latest being 31%, it starts to look like a pretty attractive period if you're an investor on the sidelines and looking at Bitcoin and saying, what's a good entry price when everything, is particularly oversold. But kind of that drawdown, the previous ones were, July 2021, which we had massive liquidation cascades, price moves 43% almost in over 30 days. And then pre that, the COVID crash, we have 52%. So pretty significant over the last, 3 or 4 years. So to see that as like a top 4 drawdown in terms of price, which I think at the same time, when you look at the demand side, we've seen some fund inflows pick up. Different ways that you can, measure whale buying. You see some accumulation and demand there, apart from other news stories we get of other people picking up Bitcoin. So that latest drawdown seems like a pretty attractive price where people got at 34, 35,000. Seems to be a little bit more demand there. Didn't reach kind of 30,000 lows that we saw before. So just kind of an interesting point there. And then I'll just touch on, kind of, let's see if I get to the next slide here, just looking at like mega 1 day percent changes. So yeah, in price, when you look at just day over day change. So for a long time period through Q4, didn't see in terms of like major volatility moves. And then you get this huge drawdown period to the bottom side that's quickly kind of accumulation is built up or demand is built up there. So just some interesting observations for, kind of price change demand over the last 3 months.
Root, you want to jump into either of these slides that Sam just went over?
Yeah, sure. So yeah, I think the price changes, they're very interesting charts, especially the 30-day price change. I think, they align kind of with what I already said earlier, that kind of this macro bottom seems to be in. You can see that this last, the dark blue zone, let's say at the last drop, which kind of indicates that this bottom is in, also from price change perspective. I think there's several several on-chain indicators that there's confluence with those indicators in terms of this, and I think we see it kind of at many. If we look at things from this like more TA perspective, or even from the fundamental perspective, we get to like similar conclusions that it quite looks like this bottom is in. And another way to look at this is that again, to say like, why wouldn't we drop like further or so? We also have to keep in mind that we had like a distribution top and not a blow off top this time, and so the downside also seems to be less, and there's a lot of the derivative market has a big influence as well on the market. During the bull market, we saw that there was a lot of leverage, going into, instead of spot, derivatives were being used. And we see that now also in the bear market, in these a bit of more bearish conditions, that derivatives are playing a role. So there's less, there's de-risking, which happens in the derivative markets instead of in the spot, and so this is also another reason why I think that the low is likely in, and that we don't have to expect a deep drop like for example as in the Corona crash, which you can see like the minus 52%, and now we have had like the minus 31% almost. So I think, unless we get a black swan, as I said, we can reach those kind of similarities still with the Corona event. Otherwise, I think, it's more likely. Doesn't mean that it cannot happen. Everything, we look at probabilities all the time, but my base case would be definitely that the low is in, which also seems to reflect in this chart.
Yeah, totally. And I don't have the chart here, but we've shown the derivatives kind of funding chart very color coded before in terms of what we saw in like the April, kind of June, July area, where you have kind of overlong leverage liquidations, and then you have an over period of, short liquidations. Oh, the market is overlong, then it's over short, and it's inflating price and it's deflating price. And now what we've seen kind of like over the last, 1 to 2 months, we've seen this like slow winding down, a little bit of leverage leaving the system, and overall everything is more market neutral. So I would say when you think about, okay, is the macro, the on-chain, the derivatives driving, I would, in my head, I would say, okay, really subject to macro conditions now, on-chain fundamentals kind of second behind that, and derivatives don't look too overextended like they had when we were at kind of previous April top. But we can get into some of the on-chain stuff. This kind of goes along with a little bit of price changes and kind of on-chain sentiment, and then we can get into some other kind of macro on-chain indicators, some interesting ones that we're looking at, talk about bottoms and tops. We're at the cycle. What I'm showing here is just spent output profit ratio. So if you're familiar with on-chain, or you've seen it, you're probably familiar with this metric. It's really calculated as price sold over price paid. So just looking at when the market is in, kind of this state. Is it taking profit? Is it taking loss? It's looking at the 7-day moving average here. And I've got two charts here, just breaking it down into two groups, short-term holders and long-term holders. And so, what's interesting about this one is typically, we, in these kind of bottom market events, we go through, people realizing more losses or realizing a lack of profit, either profit or loss below that. So here, you have the market realizing kind of in previous downturn in terms of June, upward of a couple percent during the COVID crash, upwards of like 4 or 5% realizing in the market. And so now we've kind of come from this bottom where people were selling Bitcoin, realizing it at a loss, kind of a total aggregate level. And we're back to this kind of like state of profit. SOPR is back over 1.0, which has typically been a positive sign in the market. We'll see if this sustains, and we can talk about it between the two different groups. But I don't know about you, Root. I see this as, generally a positive sign right now that we've kind of out of this short-term holder, maybe capitulation, selling some losses, still below the on-chain cost basis, like you mentioned, of around 47,000 or so. But kind of a easy landing or soft spot right here where we're at right now.
Yeah, so exactly. So the short-term holder SOPR is especially, more on to look at the shorter time frame as well. So it's like more an early sign, let's say. I've actually used this chart for my for this week's analysis of BTC Direct as well. I was looking at this as well, and so SOPR, we tend to bounce off one during a bit of like bullish periods, and we reject off of one during like the bearish periods. And it's a good indicator to find like local bottoms and local tops, like in the market. And so the short-term holder SOPR, but as well as the just regular SOPR, it's now, so it looks at basically at an aggregate of all transactions of the day, and if they are in profit or in a loss, like on average. And so if they're above one, they're in a profit, and that's why it tends to be, it tends to bounce off one during bullish periods and reject off of one in bearish periods, as I said, because this is, in a bearish period, when we get to one, so basically people that hold that transaction get break even, and so then they tend to sell, and that's why we reject off of one, and the opposite is true in bull market conditions. So in bull market conditions, one means kind of that the profit has reset to zero, and that's often a sign that we go back up. So the positive thing, I mean, here at this chart, we look relatively zoomed out, but if you zoom in a little bit more, we kind of had like a bounce off one, just a very small one. So it's a little early to say that we're back in a bit more a bullish period, but we had this small bounce off of one, which is generally a good sign. We have to see if it doesn't reject, in the next few days. But if we go up a little more, even in the next days or so, I would say, that's a very good sign again, that the bottom is in. So yeah, nice chart.
Yeah, and then kind of the other side of that too. I mean, short-term holders, kind of long-term holders. I think long-term holders are kind of a more interesting trend when you're looking at kind of spent output profit ratio in terms of a lot of distribution or kind of local tops when you see like an extended period of profit taking. So if you kind of look at the bottom chart here, kind of long-term holder SOPR, you're looking at, kind of this peak in when we were in 2021 around April. You're seeing, long-term holders on average in the market realizing upwards of, 700% in the market on a 7-day moving average, which really kind of marks the peak of the cycle here as long-term holders are, selling, they're distributing, they're taking profits, and then you kind of run out of kind of new buyer demand. So it kind of gets exhausted. And then we have kind of cross the fall again. But what's interesting is, we have a lot of profit taking during that period. Back to our most recent high, very small, very muted in terms of what we saw before. So, I'd take this and have been for a while, long-term holders, just generally looking and having holder conviction. And we can talk about it a little bit more, looking for higher prices where their kind of cost basis is now, or the price they paid. And then we just got a little annotation here, spike in it when Bitfinex had kind of hacked coins seized. So you see that a little bit on-chain movement there, but mostly kind of muted in terms of overall, profit taking, what we see from long-term holders right now.
I just want to jump in again and encourage everyone. This is brought to you by the Deep Dive. All the charts that we are discussing are viewable via YouTube. If you click on the first pinned tweet, you can go watch this on YouTube and see the charts that we're referring to. And all of the charts that we're discussing were created by Sam and Dylan LeClaire, and they put on the deep dive every single day to paid subscribers, and they also do a weekly email for free subscribers. And they, put together all this incredible information on a weekly and monthly basis. So really, really incredible stuff. So go jump over to YouTube, check it out. Go check out the deep dive. You can sign up by going to Sam's profile and clicking on our welcome link in his pinned to his info. So go do that real quick. And yeah, I guess, Sam, let's keep rolling with what's happening with the price and these charts.
Cool. Yeah. Why don't we jump into a couple on-chain cycle indicators and just talk through where they're at, where they've been in previous cycles, some ones that, I'm kind of looking at right now, where can share on his thoughts on ones he's looking at and paying attention to. Obviously, one of the biggest ones in terms of on-chain, Dylan and I are tracking, some of our 2025 kind of key on-chain metrics, and we're trying to look at those, how they've historically performed in different cycles and where we're at today. So this one I'm showing is just market value over realized value. And then there's Z-score version of that, which is just value over mean, some statistical normalization to give a little bit better signal in the metric. But really what this says, you can look at market value, same price, around 44,000, or market cap around 860 billion, over realized value, which is kind of that on-chain cost basis net. So we talk about short-term holders having, an average on-chain cost base of 47,000. If you include long-term holders, that brings, your realized cost basis, your value down to 24,000. You can think about a market cap terms around, kind of 460 billion. So it's really just a ratio of those two, probably one of the most popular on-chain metrics to look at. I think there's a lot of value in this one, but in this particular one, what we look from previous cycles, we have these blow off parabolic type moves in these tops, and then you have the extended downturns where kind of the market value or price even reaches below realized value, and those become, pretty kind of generational buying opportunities when that happens historically. And what we get this time is we get price kind of overheated to the upside, but not near as much as what we saw in previous cycles. And then every time prices essentially try to cool off and reach back down to that cost basis. In the last two price downturns, see some demand stepping in to buy into that. And so, and I'll just emphasize, these colors, a little bit more of a subjective way, although grounded in some objectivity to kind of do this, help people give a good idea of different parts of cycles, how we look at it. So this is just based on, percentile analysis, where we look at the value today relative to historical percentile, and then we just put some thresholds around that based on history. So in this particular case, something that's overcooled, really dark green here in MVRVZ score, is below its 15th percentile, and then kind of overheated is above 98th percentile. So one that, right now points to kind of more of a neutral market standing, fits with that, in this consolidation ranging phase, looking to see what catalysts move where we go next.
Root, I'll pass it to you.
Yeah, I'll jump in. So I really love this on-chain metric. Market value against realized value is a very useful tool, in my opinion. So yeah, you can clearly see in this chart that we never got to the overheated, the truly dark red, let's say. But so therefore again, I would stress that we also will not get to the overcooled, like so it goes both ways. If we don't have the extreme upside, we don't have the extreme downside. And so I'm not saying we will not get a blow off top again in the future, but the market has been maturing a bit. I mean, the size of the market is bigger. Derivatives are now a part of the market, which, maybe is just, it's more reasonable to assume more of distribution tops and also less severe bottoms from now on. Like, things could change. There are some theories, maybe on why we would maybe perhaps get blow off tops in the future. But for now, it seems we're in this phase where we kind of have just more of distribution tops and less severe bottoms. So again, like only like a black swan event, I would expect us to get like to this overcooled, colors. But otherwise, I would think like just the green cool colors are good enough of a bottom. And again, if you compare it to the 2019 run up, which was from 3K to 14K, let's say, it also was not as much of a blow off top. And it was also kind of a little bit more distribution top, and there we actually also just got back to a similar level that we are now, at just a cooled level. Only the Corona drop took us to like overcool levels. But if Corona wouldn't have happened, I think we would have stayed in just the lighter green colors there as well. So this chart again shows this basically. Yeah, there's a lot of confluence along many of the on-chain indicators, which kind of show this narrative.
Yeah, no, and I love the point too that if you don't have this blow-off type top, you don't have that volatility, the upside, then you're certainly less likely to get that downside potential as well. We can go into another one here. Just got a few here to kind of talk through, and kind of same pattern, percentile analysis around these on-chain indicators. This one in particular is coin days destroyed, and it's the 90-day cumulative view of that. So just a refresher, people who don't know, coin day destroyed would be, let's say, one Bitcoin has sat in an address for 100 days. And then when that is transacted or moved from that address, or we see movement in that coin, essentially you have 100 days, coin days destroyed then. So it takes into account when you have kind of these longer holder coins that have been around for a long time. Let's say it's a very small amount of Bitcoin, but it's been around for 1,000 days and hasn't moved. So when it moves, it has a higher amount of coin days. And so we look for that activity as saying, is there a lot of distribution in some of these older coins that are moving, or is there a lot more maybe non-movement or accumulation that's happening when you look at coin days destroyed? So if you were to look at this chart and say, just a coin day destroyed on a specific day, it doesn't give you a lot of insight. But if you aggregate it over 90 days, it gives you a good picture of kind of like where the short-term trend is. And so, a big thing that we see now in terms of our previous top that we hit, we saw a lot more older coin activity, and that's confluent with a lot more profit taking and long-term holder groups. We see a lot more activity on the ledger where you're seeing older coins come alive and sell, take profits, do that at the top. And that top I'm referring to is around like April 2021. And then you see us make a new all-time high top, but you see much less coin movement here. Like you see much more holding activity from long-term holders. You see a lot less distribution. Again, signaling, this is the case where the market is not overheated at these price levels based on the activity of kind of long-term holders, and points to, again, that right now the conviction is looking for more kind of higher prices before distributing a lot more of those coins. Would comment too, this is relying on like new demand coming in as well. So if we have a lackluster group of new demand, then you're probably not going to see pushing up higher prices or heavy distribution there either.
Yeah, so this is also a great chart. I think what's very interesting is that we made a new all-time high, during this heavy accumulation, and it's basically the first stop we had was based on hype, and so there was a bit more distribution. It still remained kind of neutral, but the second top of 69K was just based on long-term holder conviction rather than short-term holder and hype. And you can clearly see that in this chart that there's accumulation going on while making a new all-time high, which is it's quite interesting. It shows that there is conviction from long-term holders, and I think that's a very bullish sign. Because that's once short-term holders start to come in this market, if hype starts to pick up again, and that's just a matter of time. It takes probably a catalyst. Some type of catalyst to start going. Maybe the meetup in Miami can cause some momentum to start going, which is relatively soon, or some other bullish news. But we kind of see that short-term holders are slowly getting, they're picking up. We've just made a low, and we're kind of picking up. So short-term holders are slowly coming back into the market, and so it takes some time. But in the meantime, long-term holders have conviction, and that's why we made this second top, in just basically more bear market conditions without any hype, which is quite remarkable.
So bullish. I absolutely love that point. Root, you've made it before on Twitter Spaces here, and I'm really excited to just continue to see the long-term holder conviction grow and that be something that people rally around. I also am kind of bullish for the Bitcoin 22 pump. So, I mean, I don't want to jinx it too early, but a lot of people are coming together for Bitcoin 22. It's going to be a big deal, and it's really, really exciting. So check that out. Go to b.tc/conference, April 6th. It's 49 days away. It's April 6th through 9th. All your favorite Bitcoiners. Today, we just announced Jordan Peterson, a lot of really big names. President Bukele has promised huge announcements. So really, really excited for this event. But yeah, I mean, really exciting to see that. And I want to make a shout out for everyone on YouTube. Smash that like button. Make sure to subscribe to Bitcoin Magazine. We're bringing you no BS Bitcoin content every single day in multi-channels. We're doing it on Spaces. We're doing it on YouTube. We're doing it everywhere. So bringing you the charts, bringing you the newsletters, bringing you the hard-hitting Bitcoin content. So, this is what Bitcoin Magazine's all about, and we're doing it on pretty much every platform. Back to you, Sam.
Cool. I've got one more here in just terms of on-chain indicators, kind of macro, cyclical, where we are, how we're viewing them. And then we can go to another topic. We can dive into any other kind of macro on-chain indicators we want to cover. This one is a little bit more complex, but it's got a lot of information tied into it. It's called reserve risk. Basically, what this is a cyclical market indicator, and it's trying to quantify the risk reward, or kind of the opportunity risk of allocating to Bitcoin based on conviction of long-term holders. So we talked about how you can see the conviction of long-term holders in you can look at their supply, you can look at their profit taking, you can look at coin days destroyed, which skews towards older coins. This is kind of a metric that encompasses a lot of that all together. And so I won't get into maybe the weeds of this calculation because it's really deep and not fun necessarily for Twitter Spaces, but we've got an issue on it on the deep dive. It's number 94. We can put a link in for that. I know Glassnode has some great videos and talking through how reserve risk is calculated if you're interested in getting to the weeds. But really what this is saying is like when reserve risk is low, holder conviction is high and price is low. And so when reserve risk is high, holder conviction is more low and price is high. And so when you think about the best time that you want to allocate to Bitcoin on a risk reward standpoint based on its history, the best time to buy Bitcoin or allocate to Bitcoin is when you have confidence from, long-term holder owners of the asset, and that's very high. But then the price is very low, and the worst time to buy is when their confidence is low. And so this is a good indicator when people talk about the smart money, long-term holders, what's happening. And we're getting to a period now, with price falling, holder conviction, is increasing some, and you're getting to kind of this opportunity state or kind of better reward state to allocate based on history. So it's been very few times to receive reserve risk really go through like a very low percentile or get this kind of max opportunity allocation. Like we talked about before, didn't really get kind of a blow off top, which comes with a blow off top in this metric. So may not be as much downside. So more confluence in just allocating and talking about long-term holder conviction.
Yeah, exactly. So I think this chart again shows what we kind of just summarized. Again, like no dark red colors, and there's even like only slight bit of orange here, and so why would we get into this darker green? I cannot see it happen. But again, if I look at some of the bottom indicators that I like, private ones that I use, floor indicator, which is currently at 29, which would be kind of max pain. I still think then we would maybe barely touch like this darker green zone, let's say. So but I think to me it looks still again like the macro bottom is in, and anything can happen if we get a lot of uncertainty, but it also has to feel uncertain, right? Like in this conditions have to feel realistic. I mean, we see a bit of bear market conditions on chain. Obviously, the sentiment has to align with that. So I understand that there's a lot of fear and uncertainty in the market, and but once Bitcoin starts going, above 50K or so, again, I'm sure like the bullishness will come back, and people will start saying again, like, oh yeah, it was inevitable, but now it has to feel realistic. It has to feel that there is all this uncertainty, and we can see some deleveraging and some less risk taking in the derivatives as well. Basically until March, it seems that people are not taking on as much risks in derivatives as well, and so it probably has to do with the rate hike that's coming up, and so it makes sense that until then there's some uncertainty, and we will get this choppy price action in this range. So that's kind of my opinion on all of this.
I want to jump in real quick. Someone that I respect an enormous amount, who is a macro thinker and really big picture person, hedge fund guy, says, I think we're going to go down to 20K. How do y'all feel about that statement, given the macro circumstances around stock market, around macro uncertainty, geopolitical uncertainty, etc.?
I don't mind jumping in here. Yeah, I mean, from an on-chain perspective, I do not see it happen. As I said, so my floor is at 29K, and that would be kind of the lowest we go. But sure, I mean, if we get like a serious black swan, if we get like the S&P to drop 40% or something, sure, Bitcoin could maybe head lower. With it would still be a wick in my opinion, relatively. But I think based on historic data, it seems very, very unlikely. Realized price is a bit lower than my floor indicator. We could see a wick down to the realized price, or even a bit below. We have seen that in severe severe bear markets. In the 2018 we went below realized price for a bit as well. But again, I would say, since we didn't have the upside, I just don't see us go there to that extreme of a downside.
Yeah, I think it's a really good point to say, without the upside, where's the downside? I think ultimately what you're betting on there is, like Ruth said, black swan event, something in equities. Equities already down 10, 15%, already had that drawdown. So essentially, with Bitcoin being a higher beta asset to equities, kind of moves further on their moves. You're going to be looking for another 10, 15% type move down event. So I think that's what you're really banking on if you're looking at price going that far down. Even then, realized cost basis right now is at 24,000, and there's been a few events in Bitcoin's time where that's been tested, where price goes below that in the worst case scenario. And then that's quickly, a long-term great buying opportunity if you're looking at, 4 or 5 year time horizon. So I would put a low probability for my end, not out of question, but I think, there's some bearish room to go lower, but not that low.
All right, where do we want to take it next? Exchange balances?
Yeah, we can cover exchange real quick. I want to leave. I know Root has done a lot of interesting work on halving cycles, Supercycle analysis, and we got a chart from him in here. So I'd love to spend more time on that. But we can run through just kind of the state of exchange balances so far. Let me get this back. 2 changing slides.
Quick reminder, if you are listening to this on Spaces, we have a lot of new people. We are sharing all of these charts over on YouTube. So the very first pinned tweet has the YouTube link and you can watch this live. But yeah, I think we are sharing the charts again. Go for it, Sam.
Yeah, charts are back up. I think exchange balances, it's a simple way to look at the market, but a good way for a lot of people who are not digging on chain all the time to try to get a more macro picture of what's happening, as I think, exchange kind of balances and the flows can give you a proxy for some demand, especially for outflows and when that's happening. Would just caution with the exchange balance flows, shorter time frames, when you're looking at a day or a few days, this stuff changes all the time, and it's very dependent upon address and entity clustering and classifications and really sophisticated data science techniques that we don't do in-house. We rely on a lot of class nodes in this case with this data. So just caution people when you're looking at that on a shorter time frame. But I love this chart from a monthly view. And we talked about a lot in terms of this trend in exchange balances declining since 2020, which is really March 2020 COVID crash. You have years and years of inflows on monthly and annual levels, and then come 2020, we see this huge outflow of Bitcoin from exchanges each month. And we, continue to see so far in 2022, kind of into January, we had some modest outflow into October, which you talk about, maybe some more macro selling in October, November, December, kind of in Q4. It was, much smaller in comparison to what we saw in May of 2021, right before that kind of huge liquidations cascade. But so far, starting to see a decent amount, relatively strong amount of exchange flowing out of, or Bitcoin flowing out of exchanges, which, a good signal of like that short-term demand. So I would look at that and look at fund inflows and look at kind of accumulation across different groups and say that's good confluence that there's good demand and buying here for Bitcoin. And so, hopefully we're going to continue this trend through the next couple months.
Yeah, I think it's a very good sign. Exchange outflows, that just means there's a bit more conviction. People are storing their coins in cold storage. I also think we will kind of just, since we are in this kind of accumulation phase, it's likely that we will continue to see exchange outflows. I think only when there's a bit of hype coming and some, if we get really some higher prices that people are tempted to sell again, that we will see some inflows into exchanges. So I still expect in the next months to just kind of have like this slight outflow of coins out of exchanges.
Yeah, and then this is just another way to look at it. Show another chart here, just looking at like the latest 30-day sum kind of cumulative flows of exchanges. When that's, on the scale here, we've got an extreme of, 200,000 really dark blue flowing out of exchanges versus, 200,000 flowing in a state of over the last 30 days, about, 35,000 Bitcoin flowing out of exchanges, somewhat of a decelerating trend. Kind of shifts right at that January 22nd, where Bitcoin seems to find that bottom around 35,000, start to see a lot more buying and exchange outflowing around the same time. So just an interesting thing to keep track on. And then, last chart we can do here on exchanges, and we can, maybe switch over and talk about halving cycles. This is just another way to look at that relationship between price. I find it useful for myself when I think about the 90-day flow of exchanges, net positive, or like inflow versus outflow. And so I've got the axis flipped here on the right-hand side, which is kind of that total 90-day cumulative flow. So that when, Bitcoin is flowing out, you're expecting to see this, correlation with price moving up. And then, reverse when Bitcoin is flowing into exchanges, kind of see that price off. And so that's a relationship we've seen pretty strong over the last year, apart from a few months. And so that's what we're seeing now, right? We're seeing what seems to be more demand flowing in, more Bitcoin flowing out of exchanges, price kind of moving in coordination with that. So, an interesting way to look at like kind of the 90-day trends and see how that's going to continue. But so far, kind of a deceleration in terms of more outflow is a good sign short term.
Yeah, definitely fully agree on this chart.
Cool. Why don't we switch topics here then, and then talk about some Bitcoin Supercycle dynamics, maybe your thoughts, your thesis on this route. I know you just put this out today, so I'm curious to hear. I haven't got to hear kind of a more long thesis or understanding of it yet.
Yeah, so here we look at a bit of the supply dynamics, on chain, and that in terms of cycles. So you can see here it starts around the second halving. We have this supply from long-term holders that is in profit, which turns over, right? And this is normal during the beginning of like a new bull market when when there's a lot of demand. This was the 2017 cycle. There's a lot of demand coming in the cycle. So profit from or supply from long-term holders goes to short-term holders, and so you get this turnover. And then, so obviously at the top, we have the short-term holder top in 2017, a lot of hype in the market, and that hype ends. So then, you can see also that kind of we mark a bottom with the profit, supplied by long-term holders that is in profit. And then we kind of, we get into this bear market. And so basically you could see this first dotted line basically as a kind of a first support line as well there from if you look at supply from long-term holders. And then so if we get into further in the bear market, we break that support basically, and we go down even further during the bear. And this again, so we had a blow off top in 2017. We went to these extreme lows, in 2018, 19 even. And then we got this long-term holder run in 2019, which was actually just based on the conviction again of long-term holders, because there was like hardly any demand coming into Bitcoin, and there was no hype. Really, there was a bit of hype around the long-term holders, but there were not many short-term holders coming into the market. Like some in 2019, but it was still relatively low. And so we got this top based on long-term holder conviction there. We went to 14K, and then we started, dropping again. It was not sustainable because there was no new demand coming in to keep on, keep this move going. And so we went down, and you can see then that we kind of made the bottom again with the profit, with the long-term holder supply and profit in that first orange circle, which you could mark basically as, well, the end of that cycle, or the start of basically a new cycle. So we find that support on that same dotted line, the first support area, and then we get soon after we actually start recovering, but we soon after get the COVID, the black swan COVID event, and we drop even lower. So we get kind of this black swan. We go to the floor basically in this chart. And then we obviously that is Bitcoin is very underpriced. Many of the long-term holders started to buy when Bitcoin started to drop there, me included, and we went straight back up. and this was the third halving. Also, some of the hype maybe from the halving coming up. Fear quickly dissolved, and we got back into this bull market mode. And so we made a similar pattern there with new highs. We had again this kind of soon after the third halving, we made like a small top, a bit of a dip there, and then again we went into this new phase of hype, and the same thing happens over. Long-term holder supply of long-term holders, then profit moves to short-term holders. We get this short-term holder top. Exactly the same thing has happened during the second halving cycle, basically. And the last run, it was purely based on long-term holders. Short-term holders were out of the market, and we made this top just based on conviction of long-term holders. And since then we have come down a bit, but we found now again this support at this first area. Now there is no second floor here. That's again for me a reasoning that why I don't see also Bitcoin price going even lower, because we kind of found support at this level that seemed to be also a line if you look at this pattern in the previous cycle. And so I would argue that from here up, like we were starting a new hype cycle, basically. It will go slow at the beginning. Hype will take several months before new hype comes in. But to me, this is kind of the first sign on chain that we're kind of deviating from a traditional cycle, which used to be from halving to halving, because here we have seen this exact same pattern that we had in the whole last halving. It just played out, and we're not even halfway this halving, right? So to me, it seems that we're kind of deviating away from the halving hype cycle, and that perhaps like we could see this as a new cycle starting, which is basically the meaning of a super cycle, right? Deviating away from the traditional halving cycle, and so for me, these are the first signs of that. And it together with like more derivatives in the market and things going on, this kind of makes sense to me as well. At some point we had to deviate away from it, because also the influence of the halving is has been decreasing traditionally. Every halving impact was kind of less, except there obviously was a lot of hype around the halving, and that certainly could be again about next halving. So it could still be a catalyst. But it seems to me like I cannot imagine now the next 2 years, basically until next halving, that we're just going to have like kind of bear market conditions. I would expect again for this demand to slowly pick up, and basically the start of a new cycle, as you can see in this chart. So I still expect to make some new all-time highs, maybe later this year. It can perhaps be at the end of this year, and certainly in 2023. I wouldn't rule that out. It can take a year for this to build up, but it kind of seems to me that we're at a low, and that we're slowly picking up again the start of a new cycle, which to me is very bullish.
Sam, I want to pass it to you, man.
No, I love this idea. I've been trying to wrap my head around for a long time, only a few data points in terms of where the cycles have been. And obviously, Q1 was a big way to see during this macro uncertainty that kind of cycle that we've seen before. And when you look at cycle multiples, that's getting more diminished in time, whether it's lengthening or whether we're going through a lot more of these kind of mini cycles where we get this less volatility on the upside, but also lower volatility on the downside. So it seems to be the first of its kind that's playing out, and kind of expect to see a lot more of those maybe smaller style cycles in here play out as the asset gets more institutionalized, more capital's flowing in, volatility is just muted anyway. But then again, at the end of it, there's this S-curve adoption that we're just taking part in the very beginning stages of. If you're thinking that Bitcoin is 2 to 3% of the adoption of the population, so in my framework, I'm using that S-curve adoption, that kind of exponential S-curve trend that we've seen with internet and with smartphones, and kind of watching that speed up, and assuming that Bitcoin has to go through that type of phase too, which whether it's this time around in 2 years where we see that type of explosive exponential move, or kind of maybe 2 years, 4 years from now, it's hard to tell when and where we're in that adoption curve and how fast it's going to move. But no, I love this chart from Root.
Yeah, thank you. So it also, I mean, it depends, on the definition of cycle a lot. People use a cycle all the time, but you can measure from different points. You can measure from halving to halving. Now I'm kind of looking at like a supply dynamic cycle basically within Bitcoin. So there's different definitions for cycle which make it very confusing. So still from halving to halving, you could look at this from from a lengthening cycle perspective, right? Like we could get a top next year or something, or a new all-time high next year, let's say. Then it would be perfectly a lengthening cycle if your definition is cycle from halving to halving, right? So it very much depends on this, but underneath all this, these dynamics are going on, and we can see them on chain, and I think they're very interesting to look at. And so it's a bit of a different definition of cycle that we use here. But yeah, I think these supply dynamics are very interesting to see play out, and so yeah, I'm very bullish for the next 2 years, to be honest.
Y'all, we've been going for about an hour here. I think it's getting about time that we wrap it up. Want to go into kind of last words. I don't know if there's anything else that you want to share, Sam, or if we can just kind of go to closing thoughts here.
No, let's go to closing thoughts. Sounds good.
So I guess, yeah, I mean, if you were to summarize what you're seeing, what you're talking about on the deep dive, maybe what you're dropping later today, what would you tell the Bitcoiners listening?
Yeah, definitely. So from my point of view, I'm more leaning, macro, concerned, uncertain, bearish, however you want to call it, slightly kind of gray area over the short term, next few months. I think there's some incredible fundamentals within Bitcoin. From when you look at the on-chain perspective and you look at kind of this lower dampening of derivatives right now. So very bullish from that perspective, kind of more long-term, still cautious in the short term over the next 3 months. Would love to see how Bitcoin responds to equities over the next few months, and then also look at kind of this divergence or decoupling that everyone's always talking about, and hoping that we see more of that as a standalone asset over the next year. What we're dropping today is probably some extension of these charts, looking at just cycle top bottom indicators for on-chain, which lean a little bit neutral to bullish right now from, over looking at 20 different ones. So probably talk about through some of those. So yeah, if you're curious, check out the link in my bio, sign up for a free subscription to Deep Dive if you don't have it. If not, we'll be sending it out pretty soon.
Root.
Yeah, so I think I kind of summarized, or several times I got back to kind of similar conclusions over several charts that we looked at. So I think my perspective is kind of clear. In general, we this macro bottom is likely in. We will see some choppy price behavior in between 47K and 36K, in my opinion. Those are the most likely things. We can obviously go lower with the uncertainty with the macro conditions, but I still Bitcoin is actually the risk-off asset, and it's what most people still don't understand, which is why it's seen still as a risk-on asset. But I also think that at some point we will deviate from that. It might still take some time. I'm actually very bullish on Bitcoin in the next years. I think 100K is really nothing. But I look more at macro. I'm not a day trader. I like to look at macro trends within Bitcoin more than just on the short term. So if I say likely the bottom is in, that does not mean that we cannot drop a few thousand from here. I think that's totally normal. But any price level in these ranges, 36, and between current price, if you think 2 years into the future, and I would expect very likely to be above 100K, then these are perfect entry points. And we've seen in some of the charts today that many on-chain indicators kind of signal that a bottom, that we've been in kind of a macro bottom, that we're still in quite an opportunity for buying. And so I think that is very bullish. And I hope to come next week or so with some exciting news, a model I've been working on for some time, also a macro trend within Bitcoin. And so sure, check out my Twitter profile, follow me on Twitter, and make sure you keep up with you follow these updates.
Awesome. Well, Sam, Root, this was a great show. Really appreciate y'all walking us through what is happening with Bitcoin's price, being pretty honest and somber about the uncertainty that's ahead of us. There's only one thing that's certain for me, and that is that the Bitcoin 22 conference is going to be absolutely sick. We're going to be throwing a motherfucking music festival at the end. We're going to be hosting people like Jordan Peterson, President Bukele, Michael Saylor, and many, many more incredible people. So go check out the Bitcoin conference, b.tc/conference, and go get your ticket. And I think we have a promo code YTMAG. So that's YTMAG, and that saves you 10% off. And if you pay in Bitcoin, you save even more. So stack the code with paying in Bitcoin and maximize your savings. You're not going to want to miss the Bitcoin conference in Miami. Is going to be absolutely incredible. All right. I think we can wrap this one up. Chris, I don't know if you want to run a commercial, and everyone on Spaces, thanks for joining. Peace.